Okay, hi guys. This is MG Forest, guys. This is another weekly insight, weekly analysis on gold. We are still going to, as usual, as we have said earlier, that most of the weeks we'll be back testing what gold has done. Let's see what gold has done in the previous week and what we are expecting to see in gold also. So, as we have said earlier, we said one of the basic emphasis of doing this is that it will reduce some of the distraction on what we are going to expect from gold, and we know that this is our bias, or this is the direction that we are going on. So before we run deep on what we are going to expect on gold this week, we are going to check what we have done last week, and let's see how gold has done towards what we have done last week. So now I'm on daily time frame on gold, guys. I'm on daily time frame on gold, guys. From the last week, what we said last week was that this was the zone that we are looking, this particular triple top, this one touch. We said there was one touch here, two touch here, and we saw three touch. And we said from what we said that is that most of the time after three touch, the fourth one mostly we say is a break. So as we have said earlier, we said that our target last week is this high, because we said that we saw a sign of massive volatility last week. So we were expecting that last week will give us this, and unfortunately gold danced towards our tune, guys. It's a very nice one. We were on massive trade last week. I think we were able to catch almost 700 and something people on gold. So thumbs up, guys. Nice one. So let me go to 4 hours time frame so that we'll still back test what we have said on gold. From last week, we said that we saw a trend line here. This trend line here, we say this was the first touch here. We said this was the first touch, this was the second touch, and this was the third touch. And we said that from all possibility that this trend line can hold price, because not only the trend line, we said that we saw also a confluence here. We saw rejection candle here, we saw a support zone here, and other block here. We saw, in fact, even a Fibonacci here, because let me draw it, I just took it off. I think we saw a Fibonacci zone here. You see there was a Fibonacci 50% Fibonacci zone here. We saw support zone here, we saw an other block and a trend line, guys. So this is a massive confidence, guys, that can hold price. We said that even though it's a possibility, because we said that if here couldn't hold price, we are anticipating that this particular guy here, this guy here, will hold price. So unfortunately here end up holding the price, guys. That's a very good one according to the analysis we made. And we said that we are not going to jump into the market as long-term expectation until we see a break of this counter trend line. This guy here that is over here, this guy here, we said that we are not going to enter, and unfortunately the market danced towards our expectation and it gave us this move, guys. Oh guys, this almost 780 pip, guys, with a very simple stopper. We went on 1:5, massive trade last week, guys. And also we said this was our expectation. So now on our 1 hour time frame, now what do we saw? What do we said we were expecting? We said that we were even expecting a short-term trade. In fact, this was what we saw, and it's the market still danced towards our tune and gave us at least 136 pips on this short-term move that we set last week, and it danced towards the tune, guys. So last week was one of our best trade on gold, guys. I think there wasn't anything like losses that we took. We didn't, all our trade was inside massive was massively on profit, guys. I think we milked out this gold last week because we didn't take any stop loss, guys. So now based on what from our analysis, the market still broke this counter trend line. After breaking this, it went to our expectation. Now we took this profit. This was the profit that will start taking, because we said that from our 15-minute time frame, why we didn't jump to this market earlier last upper week was because we said there was a choppy mode here, this particular zone here, because here we saw a choppy mode. The market was just going anyhow here. So that was why we said that we have to wait and see what the market will do at this particular point. So after anything here, that is where our interest was. So unfortunately, the market came here down at this zone. This was what we saw. We say from here the market came and broke this particular zone. After breaking here, we went up, guys, massively. So nice trade, guys, nice trade, guys. Now see, this is what we were expecting last week, guys, and unfortunately the market went to our target. So now what are we thinking of? What are we expecting this week? Let me still go back to our daily time frame, because the market went to our expectation. This guy here, he came and tested this guy here, and we said that mostly the way the market behave is that it goes from external liquidity to the internal liquidity. External liquidity, we said this how it forms is that it goes up, take this external liquidity. After taking this liquidity that I said, to take this liquidity here, this external and this external liquidity, we said that then the market will come back from small internal liquidity, take some of the internal liquidity, come back again to take this liquidity here. After taking this one, it will come again and take this liquidity that is here. After taking this one, it will go back again and start taking some of this internal liquidity, that is this liquidity that is here, to take this one. After taking this one, it will go to the external liquidity. So this is how the market mostly behave, guys. So now based on these behaviors, now let's see what are we going to expect. Let me get rid of this, guys, so that the chart will not be messy. Based on this, our little insight on how especially gold behave, guys, and what are we expecting this week. Now since the market came and tested this, now we are expecting a little pullback. We are expecting a little pullback. So from our 4 hours time frame, guys, let me plot this. We have a new trend line here. This is a new trend line. Don't forget to always plot your trend line, because gold always dance to trend line, guys. It always dance to trend line. This was the trend line that I'm working on. Now this is a new trend line that was formed. Let me get rid of this. We don't need this anymore, because the market has already danced to us at this tone, guys. Massive trade. So based on what we are expecting now, we saw some touches here. Let me get rid of this trend line. We don't need it also. We don't need this trend line. We don't need this also. Now this is a new trend line that the market has formed. Now you see it from here. Remember I said the law of trend line is that you have to get at least more than one touch. You see here there's a 2 touch. There's first touch here. This second touch here. You see second touch here. You see this is the third touch. So in fact, the more the touches, the more the strength of the trend line. So we saw here this is the first touch, this second touch, this third touch, guy. So now after this, now this is one thing that shows us that we are on. Remember our market structure, we are still on uptrend. We are going up, guys. We are going up now. The second thing that we are going to do is that let's check our Fibonacci, so that we'll see which retracement are we expecting from our Fibonacci. This is one of our Fibonacci zone. This is one of our Fibonacci zone. This is our first Fibonacci, 50% Fibonacci retracement. Let me get rid of this also, this guy here and this guy over here. So this is our Fibonacci zones. This is our partial retracement. This 0 point this is our retracement zones. So now these are the zones that we are watching on Fibonacci, guys. These are the zones, 1 here, 2 here, 3 here, and we said from this place again. Now we have seen this is another support zone, guys, and the support zone is even resting on Fibonacci 0.5%. 0.5%, that is the middle of the Fibonacci is there, guys. So now it means on a long move we are expecting this market to dance towards one of these Fibonacci zones, guys. Now this is the good thing here, is that from this zone, now we saw this is our trend line zone. Also we saw another possibility of trend line here at this point. We saw there's a support also. There is the Fibonacci zone. Now we are going to just look and see, and here also there's an order block. There's an order block here at this zone. So this is possible for this also to hold price. There's an order block. see this other block here, there's an other block. So let me get this of this. We don't really need this again. So there's an other block here, there is this. So now what are we expecting now? From price action, from what the market has done, we saw this candle here show a sign of rejection. So it means that it has reacted to this particular zone here. So from this first week and second week, these two candles, this massive remember we're on 4 hours time frame, so it's a serious. When you see this on 4 hour sign time frame, it's a serious sign that the market is going down a little. There's a possibility of, even though we are going bullish, we're expecting a bearish pull down, especially the last candle here that was not formed completely. It's a bearish candle, so we are still expecting a little bit retracement, guys, before we keep on going up to take this, if the market really want to take this. So from what we are seeing now, these are the zones that we are expecting now to see that price dance to. The first one is this partial retracement 0.31. The second one is this middle retracement, and the last golden zone here, guys, this zone here. So once we were expecting price to drop either and react here, this zone, or to react, especially I prefer seeing price here, guys, especially at this zone, because at this zone I'm seeing a trend line one, I'm seeing a support zone, I'm seeing a Fibonacci zone here, and this there is this liquidity void, this void here, this another entering type 1, guys, a fair value gap, and also an old high. It's an entry model in ICT, guys. So I'm seeing almost 4 confidence at this zone, so I'm anticipating this zone, this particular zone here, or this zone, because this zone also there is trend line here, there's an other, there's other block here and other block here. So I'm expecting, if this zone could not hold price, I'm expecting price, this particular zone, to hold price, guys. So now this is what I'm expecting this week, guys. I'm expecting price to dance towards here. After dancing at this point, let me see a massive movement, guys, a massive movement. We are not certain if this zone is going to be broken this week, because this is the second touch, so maybe we're expecting a little touch here, then maybe the market again can end up taking partial bearish movement. But for now, this is what we are expecting, guys. This is what we are expecting for now. We are expecting this zone to hold price. This is what I'm expecting, guys. This is what I'm expecting. I'm expecting this 200 and this 200 and this 260 pip, guys. I'm expecting this movement. So where is my stop loss? My stop loss is at the other Fibonacci level, guys, because even if it should break, I'm expecting this zone should hold price, guys. So now, but we can't enter. We have to see chart pattern and other confidence that we are using, guys, to enter. So this is what I'm expecting now. But still, there's a little stuff that I've seen in the short time frame. That's in 1 hour. Let me get rid of this, guys. But my long move, this is what I'm expecting. On a long move, this is what I'm expecting. Now, going to the short time move. On the short time move, I have seen already a reversal pattern. Now, if we should check this guy here, this big man here, this price action, what the price action did? Price action form reversal pattern, guys. Don't worry, very soon I'll be updating. I'll be giving you guys some of the basic tools that gold react to. So one of what gold react to is these chart patterns, guys. Now I'm seeing inverse head and shoulder. I see this is the shoulders, this is the head, this is the shoulder. Now it's a sign of rejection. Now this price, this rejection that I'm seeing here, this can end up pushing price. You see this can end up pushing price to almost this zone here. It can push price to this zone here, or to this zone here. See this particular thing, this is what is going to push price here. If price will move, once we see a volume at this zone, a bearish volume, or we end up seeing COT showing, pointing that we are going bearish, guys, we are moving, because mostly there's a confirmation of chart pattern that price, this is going to move price. So if anything should move price, this is what I'm anticipating should move price, guys, this particular guy at this zone. So now at this point, we have nothing to do. First, we have to see how price will react to this guy here. You see this support zone and this zone. Now once we see what price will do at this zone. This one we are going to make a move. So in fact, you can even scalp a little bearish based on the reaction of price at this zone. Once we see a break and retest, what do I mean by break and retest? Or break with chart pattern. We see a break here, it came back and react to this, maybe forming chart pattern here. You see it here. Once we see a break and retest of this guy here, these zones, guys, we are going to expect a little bearish movement that will take us to where? I'm coming, let me take my arrow. That will take us from this place to here or to this guy here. So there can be, we'll expect a little divergence also, a little divergence here. We're expecting, even though this place is consolidating, but we have to see what price will do at this zone. Now if we see price want to keep on consolidating, that is from this place to here, then we'll still be following, just ranging, we'll be trading ranging. But if you're not good in ranging, just observe what price will do first. After the break to this place, or we see price breaking, let me get rid of this, or we see maybe end up seeing price breaking here. If price break here and still retests this, and we'll see when we can enter from this zone. We can enter from this zone. If we end up seeing price also giving us this, we can enter at this zone. We'll still anticipate this zone, guy, because I'm expecting a retest at this zone. So we'll end up entering this zone, guy. Yeah, this particular zone. So but based on what price give us, that's what, but here we are going 1:2. So we end up entering this zone. But if price didn't break towards this side, we'll still watch over price and see what price. So now any action that we'll do, if possible, on Monday New York section, we have to watch, and London section, I mean to say, we have to watch and see what price will do first, guys. I think it's based on experience, it's more preferable you allow the price to dance towards what it wants to dance towards first. Just allow, don't fight the trend. The only thing that we have to do is to observe what the market is doing, then we follow it and make what we want, because you can't fight the market, you can't stop the market, you can't hold the market, your capital cannot hold the market. So these are what we are expecting, guys. We are expecting a break and retest of this zone, a break and retest of maybe this zone, break and retest of this zone. If price break and retest this zone, but based on what I'm saying, I think we are going bearish for now. We are going partial bearish, guys. We are going partial bearish for now. What I'm seeing is, because of this chart pattern that was formed here, I'm seeing partial bearish, guys. So I think what I'm expecting, this is the move that I'm expecting for now. I'm expecting this move, except if I see a break and retest of this zone. So I will expect a retest of this first. But based on what I'm seeing here, the high possibility that I'm seeing here is bearish, guys. So I'm expecting this zone here, this is the zone that I'm expecting, guys. This zone that is here. So it's 1, 2, almost 1:3 issue. This is the move that I'm expecting, guys. This particular move, this is what I'm expecting, guys. This move. So once I see price break here from chart pattern, we are going bearish. And if I see a sign that this cannot hold price, I'm expecting this also to hold price. This particular guy over here, I'm expecting this guy here, this guy that is at this side, this guy, I'm expecting this guy to hold price. So this is what I'm expecting, guys. This is what I'm expecting, guys, for the week. This is what I'm expecting. So I'm expecting from, it's either this zone here should hold price, or this zone should hold price. So we are taking partial profit at this particular point here. We are taking almost 70% at this particular zone. Then if this could not hold price, then we'll anticipate this guy over here to hold price. This is my analysis because of the chart pattern that was formed here. But if we see a break and retest towards this after this zone, guys, we are going up massively. So now this is what we are anticipating for gold, guys. So I don't know if there's any question that you have, or any maybe video that you want us to work on in MJFS, guys, especially on gold, because we are out here to make out gold, guys. So we'll see it from the comment section. And still, if you are new in this channel, don't forget to subscribe and also smash on the alarm or the notification button, guys. It's MJFX, guys. Thank you, guys.